The information in this podcast is current on the day of recording. It is general advice only and does not take your personal situation into account. It may not be suitable for you. Participants in this podcast may also own the stocks discussed. For a full list of current recommendations and stocks owned by staff, members of Intelligent Investor can visit www.intelligentinvestor.com.au.
Welcome to the final stock take for 2020. My name's Gaurav Sodhi. Joining me today, analysts Mickey Mordek. G'day, Mickey.
G'day, Gaurav.
And with us also is James Carlisle. Hey, James.
Hey.
Well, this is the last one, gents. I can't say it's been a pleasure this year. You're probably feeling the same way. Everyone I know is feeling the same way. But when is this going to be over?
Don't want to wish it away.
Oh, no. Look, it's been great in terms of investing, and we'll talk about some of that. But it has been a mentally draining year.
Yeah.
One of the most exhausting years in my memory.
I feel as though we've been largely untouched compared to others.
Yes,
compared
agreed.
to Mickey, but also compared to people around the world.
Oh, look, I'm just more thinking just the sheer workload as well. You know, working, looking at stocks. It's just been a lot to look at, a lot to digest, and the
That's good though, isn't it?
toll.
I mean, it's a problem when there's not things to write about.
Yeah, that's true. We've had that problem as well. Yeah, but I just the psychological toll of things flying and then falling and then flying again, and so much chatter from everyone else. I found it tricky.
Well, it's been stressful because there's been big issues flying around, and it's been, there's people have been getting angry, and that's quite draining. I think people, heated conversations and debates, and I mean that does drain one a bit.
Yeah, we've had a few of those, haven't we? Hey, Mickey, you're a bit quiet over there. How you doing?
Oh no, I guess it's a bit of a shame to kind of just kind of look back on it and wish it was over. But I guess it's well, the year's not over. At least we're kind of coming out of it with Christmas and stuff, so there's still time to make the most of it. But it was a good year, I think, as well. Like from an investing perspective, for sure, and like really valuable learning experiences coming from it. That I think will be very good for most investors for a really long time. So,
See, I wanted to talk about this because I think that's the consensus. For me, still the most valuable lessons I've learned as an investor came in that GFC period. But there were lessons here, but I would say it's been less informative for me than the GFC was, which was really, I think, that's what kind of made me as an investor that period. It was genuinely frightening. I was genuinely panicked, and I learned so much from there. This time was a bit different. Let's talk about that for a moment, actually, gents. March was one of the most acute falls in the market ever. Certainly, the sharpest that we've seen in our investing lifetimes. Mickey, I remember at one point you making a comment saying, "How did you guys get through the GFC? Because I'm finding this quite exhausting." When I think we were down like 30% in the space of 2 weeks or something.
Yeah, it was. I mean, that's the thing. I think it was the sharpest fall ever. I mean, the GFC ground down for a year or more, and that was draining. Whereas this, you blinked and you missed it. I mean, it was 2 weeks and it fell 40% or something.
well, I think Gaurav wrote back and he said something like, "Oh, this is worse because we can't even see anyone." So it's like a GFC that could kill you or something. I think it was
GFC
it was the hot
and
center
a threat to your life. Yeah, well, fortunately, the threat to our lives, sort of in Sydney anyway, went away reasonably quickly. But
yeah, that was one of the tricky parts because during the GFC, I mean, I was quite new to professional investing. In fact, I hadn't joined yet. I was doing my private investing, and I hadn't really built a network of other investors, and so I felt as though I had to go through that experience on my own, and I was quite inexperienced. And this time, I've actually got a great network, and I couldn't really put it to use because we couldn't really see anyone. And I guess there's always the phone, but it doesn't work quite the same as going out and seeing someone, and that made it hard.
I remember a good month or two period where I was just calling people every day and I was just going, "What the hell is going on?" And they were going, "What the hell is going on?" Everyone was just everyone's going, "What do you think's gonna happen?" They're going, "What do you think's gonna happen?" Just no one. Yeah, it was a pretty frantic period. But it was good to have those chats at the time, because it was pretty daunting just being on your own and watching stocks falling 20% a day sometimes.
Mm.
And just having to face that, I think was really challenging. But yeah.
Well, are you happy with the way you dealt with it in the teeth of the crisis, gents? I mean, this is a good chance to look back at what was a really sharp and painful down draw, and think about how we reacted. So, JC, let's begin with you. How did you react, and were you happy with your subsequent actions?
Yeah, I think. So I suppose to start with, I think I prepared well. So I had a decent amount of liquidity, basically spare capacity on my mortgage, going into it all, because prices were pretty high in January and February, and so I'd taken advantage of some of those. And I suppose that's the starting point. And but then I count myself a bit lucky, really, because I promptly sort of doubled my portfolio as the market was falling, and that's really worked out quite well. But I really, with hindsight, had no idea what was actually coming to us. I mean, you could see the pandemic. I think no, everyone could see the pandemic coming, but I had no idea about lockdowns.
Mm.
I mean, that was totally new to me. I bought Sydney Airport and Auckland Airport the day before our borders were closed, and
Yeah.
in New Zealand, I forget, we were one day after the other, and New Zealand's borders were closed. Um, and I didn't see that happening, but I think most of the market did. So I got the cheap prices, but there's a bit of luck there. Um, so yeah, I suppose preparation, having that liquidity when prices are high,
Mm.
and then being prepared to act when prices look very cheap, even if you don't quite know what's coming, has worked out pretty well.
Well, I think of everyone in the team, JC, you were probably the most calm. And I remember I
Well,
may
I
have
was
said
probably
to
the
you,
most blind.
well, I
I mean,
think this was what I was saying to you. I think you and I
we did. We
was
had that
very,
podcast where you said
yeah,
I remember you saying Italy's just locked down, and I'm saying, oh, Italy's not going to lock down. How can you
yeah,
say
I
that?
remember you saying that.
And I
Yeah,
was
yeah.
completely wrong. But everyone's locked down, and
But
look,
that may have
let's not
worked
get
to your
into that. But
advantage
what's
because
that?
that may
Well,
have worked to
maybe,
your
but
advantage.
yeah, I mean,
You kept your cool and doubled. I mean, that's extraordinary
yeah.
that you doubled your portfolio.
Well, yeah, I mean, prices were very, very cheap. I mean,
Yeah.
I was falling over myself buying stuff because everything didn't seem too bad. I mean, look, I mean, obviously there was going to be a pandemic, people were going to die, but which is, obviously that's a very terrible and sad
That's a
thing. But
negative.
I
But
never,
yeah.
yeah, I mean, but I never imagined that we were going to be locking down society in the way that we have.
Hmm.
And the funny thing is that actually, in the end, that locking down the society ended up not being quite as bad for stocks as was initially anticipated. But we'll come on to that in a moment. So,
Mm.
look, I think I was a bit lucky, but I suppose at the same time you make your own luck. So I was in a position with a decent amount of liquidity,
Mm.
and that's probably the starting point for a lot of this.
Mickey, I don't want to put words in your mouth, but I feel as though this may have been your first really big panic that you've seen. And it would have been quite confronting for you. How did you go during March?
Yeah, well, I was kind of similar to JC. I think my experience kind of rhymes with his a lot, because I think in the fear of the pandemic didn't hit me until kind of really, really late, and I think much later than most people. And I didn't anticipate the government response either. And so I'm kind of twiddling my thumbs even kind of at end of February, early March, and then all of a sudden it just went, from 0 to 100. The market was plummeting, virus was killing everyone in Italy. The economy was shutting down. Everyone was bearish. And I just remember all of a sudden, I just had this moment of terror, and just kind of everything dawned on me. And I'm like, oh, we've got to start buying some groceries and masks and gloves and sanitizer and start stocking up on all this stuff in mid-March. Um,
I was
but I,
racing around trying to buy sanitizer. Do you remember that? Everyone was
I
sold out.
I
I
remember
I
that.
think I
Forget the
found
loo
a few
paper.
on like
Yeah.
a bottom shelf at Bunnings, and I'm like, yes, I got it. Um, But it was it was a pretty good lesson in how that fear can just grip you all of a
Mm,
sudden. And I remember just having that feeling and just remembering everything I've ever read about investing. It just says that this is the time when you want to be looking at buying, and stocks were down 70-80%. And I think just, I think people, experience the GFC, we're waiting for things to get even cheaper,
mm.
thinking, you might be able to buy great quality businesses on single digit multiples. But I was looking at a lot of these stocks and thinking, these were pretty great opportunities. So I was pretty bullish in March as well, same as JC. And I think the same as probably most of the team. And fortunately, you know bought a lot of stocks. And I figured if it didn't work out, well, I can just keep saving money. And I got a long time to work and save it back up anyway. So
So did you double your portfolio like JC did?
well, yeah, put a fair. I didn't double it, but I think at that time it had
I
fallen a
reckon
lot.
I only probably added 2/3. By the way, just I feel as though I don't want to
Yeah.
Okay.
Well, at the
over egg that
time
pudding, but
it had fallen. I think at the worst it'd probably fallen 60%. My personal stock.
Mm,
So it wasn't hard to actually increase my position sizing at that point. But I did luckily have some access to some cash, and so I managed to put a bit into the market in March in particular, which
right.
was
So
good.
you did feel the panic, but you also recognized the opportunity on the market, right?
Yeah, well, I didn't know that that was going to work, but I mean, there was a lot of stocks as well that you could see that even if they weren't making money for any revenue for 12 months, they had the balance sheet to ride it out. And so if you just looked on a stock specific basis and you just went, well, this business is still going to be around, there was a lot of kind of easy pickings, I think, at that time.
Mm,
Even though it was a bit scary, I just remember feeling the fear and kind of wanting to get into the market at that point. So
mm.
yeah.
Yeah, I didn't panic as much as I thought, actually. During the GFC, it was properly scary. I had a good, proper panic at that stage. I had a much smaller portfolio. And as I said, I wasn't working professionally as an investor, but I had a good, proper panic at that stage. And we've done a lot of work as a team, in fact, about looking back at the GFC and trying to learn lessons from it. And I've done a lot personally about trying to do the same. And I think I was really well psychologically prepared for this. I did buy JC, you helped out a lot because I was actually shocked at your
laissez-faire attitude.
yes, your yeah,
I think,
your
I mean,
optimism about the
yeah, well, with
because I
that,
was pretty
like I say,
pessimistic about the
yeah.
virus, but at the same time, I knew and you could feel a sense of panic in the streets, right? I remember my all the parents at my daycare, but the teachers at my family daycare, they wanted to close the whole thing down. You could see the panic and the shopping, like I could see it everywhere. And
But like Mickey says, that all of those things are true, but that doesn't necessarily. And this is, I think, what you got to think about is that you know none of that was really meant that corporate Australia was worth 40% less. I mean,
yes,
that's the bottom line of this. And there were, as Mickey says, there were a lot of stocks which might not be earning any revenue for a little while, and that's how we had to look at things, which was a pretty extraordinary
mm,
in itself. But something like ale, I would say, is one of the best ideas of the year, even though the returns from it haven't been as strong as from other stocks. At the bottom around $4, that was because it wasn't going to stop losing any. It wasn't going to lose any rent, and the rent keeps coming in, and it would have been happy to renegotiate its contracts because then they'd have gone back to a market level, and it was just in a very, very strong position, and looking very cheap.
Well, it took a bit of courage to upgrade a few things. I think back
yeah.
in those days, like the Webjet. I think you kind of, I think at the time JG said that you don't have to be a hero, James. So he's we were all a
Yeah.
bit scared of upgrading
Well,
Webjet
but
at the
that's
time.
the thing. You do have
Yeah.
to. I mean, look, I suppose, but Webjet was more directly affected, of course. I mean, and actually, looking back, Ale did have that short-term financing risk. It had to actually refinance some
Mm.
debt, and but once it had done that, that was, I think, the opportunity there, and it was still down around $4 at that point.
Mm.
Um, but Yeah, sorry,
what was
Gaurav,
the?
I interrupted you. You
Did
were
you?
talking about the panic in the streets. Yeah,
No, this is
closing
actually a
childcare
good bit
centers
of
and
it.
stuff.
Just to finish that point, I was just I just want to say that there was you could feel the panic in the streets, and my investor brain just kicked in, and years of reading books and hearing. Who was it? Was it J.P. Morgan? I mean, the J.P. Morgan who said, you want to? Oh no, Rothschild. It was Rothschild who said you want to buy when there's blood on the street, and you could feel panic on the street. And I just remember thinking, this is it. Like this is the time when we should be
When the
buying stocks.
cannons are firing, I think, isn't that what Rothschild
You
said?
would know. I don't know. I
Okay.
remember
I
there
don't-
was it was
yeah.
something to that effect,
Yeah.
and I remember
Templeton,
thinking,
John Templeton talked about
Templeton. You're right.
when the
Thank you.
bullets
Yeah.
start firing, but that he was cribbing off Rothschild, I think. Yeah.
But in any case, I remember thinking that was the time. And look, let's talk about what we did well and what we didn't do well. I still have pangs of regret about not upgrading or buying PWR. It's a business. It's been one of my favorite stocks for many years. It's gone to the Dragons Den twice, and I can't convince anyone else about it. But I actually really like the company. If you want to know more about it, I've written it up as an ideas lab. The stock code is PWH is the stock code, so it's worthwhile reading that article. It basically makes cooling systems for Formula One cars, and all of Formula One had shut down, so the share price had collapsed. They had a little bit of debt, and I thought they would have to raise capital because they weren't getting any revenues. They had a little bit of debt. They got quite a large fixed cost base. They can't let staff go. They have a factory production facility, and so I was sitting there waiting for the cap raise. And when you got these really strong businesses with strong histories and founders in charge, they just find a way. He found liquidity from somewhere, he plugged the gap, kept on going, never raised capital, and the share price is now 2.5 times what it was, 6 months ago. It's
Gina, that's one of the lessons for me is that we'd learned from the GFC to be terrified of businesses raising
yes,
capital.
good point.
And
Yes,
any company that's going to have to raise capital, you're taught to just really wait until that
yeah,
happens
yeah,
because, the problem is that the market, like Westfarmers, I remember in the GFC, the market
oh yeah,
chases the share price down
yeah,
so you get diluted and get diluted. Um, and there were a few stocks that raise money very cheaply, like Webjet and Flight Centre. But overall, the experience was that good companies, I think investors could see an endpoint to this. Like in the GFC,
mm,
it just wasn't clear how we could have been in a depression for years. It wasn't quite clear how that was going to play out. Whereas this time around, I think investors were saying, right, so this company is a quality company underneath. It just needs a year's worth of liquidity or whatever.
mm.
And so I think that the capital raises, and I suspect there was a bit more cash floating around anyway. And so the capital raises didn't really damage a lot of businesses in the way that they did back in the GFC.
Yeah,
But also, I think because like the credit markets probably stayed open
Yeah, yeah.
because of all the
Refinancings were easier.
yeah. So you
Companies
didn't
were
really need to.
extending their debt, and yeah, that's right. They were getting waivers on their. I mean, covenant waivers were not really a thing in the GFC. I don't
and
think.
banks were in good condition this time going into this
Yeah,
crisis. They had
yeah.
really good coverage ratios, and they seemed to be prepared to step in.
It does make you think though, like if after this pandemic, with businesses not making any money, what could potentially kill the economy? It's like it's just hard to think of anything. But it's just all this government intervention doesn't seem to have any consequences, and I
Well, the
don't know.
consequences are, and this is the thing. I think the consequences are to the taxpayer for the next 60 years, and
Yeah.
and and that doesn't necessarily that slows down growth.
Mm,
And that slows down and that keeps interest rates low, but that then plays into the ratings of these high quality companies. So I think
yeah. Yeah.
the strange thing is that high quality companies don't actually have as much to fear as one might have thought from a devastated economy, because there's little other option to make a yield.
Mm. So
The
kind of
point
yeah.
and the point about cap raise, just getting back to that cap raise point, fellas, that I mean, there was a lot of talk in the team and amongst other people I was speaking to about you know targeting businesses with high debt loads that were going to have to raise capital. Buying a little stake. I bought little stakes in a couple of businesses, Center Group, one of them, expecting a cap raising. Um, and then just it didn't come. And when it
You
did
still
come,
got a little bit. Mind
and
you,
I've still got a tiny stake
you
in
made 60%.
crypto.
I'll
Yeah.
pay the brokerage, won't it?
Yeah, I just wanted to make the point about cap raises that that we were sitting there waiting for all these high debt businesses to raise money, and many of them never did that. And even if they did do that, um, everyone else, all other shareholders, were trained to buy those SPPs, and they were always oversubscribed, and they were never the opportunity they were in the GFC. And I think that's an important point to remember for next time, is that
Well, you were also scaled, weren't you, to the
massive.
size of your holding? Whereas
Yeah,
in the GFC, everyone was allowed to buy. You only had to have $500 worth of shares, and you could
yeah.
buy 15 grand's worth.
Well,
Whereas with this, everyone got scaled back depending
everyone
on the
had learned
size
from
of
the
their hold.
GFC that that was a
Yeah.
great opportunity, and everyone, I think everyone was
Well, and
replicating the
companies had
strategy.
learned and didn't
Yeah,
want
probably.
to, yeah, and so
And
structured
the
things a bit
final point
differently.
about the cap raises, and then we'll move on to your guys' things that you learned from your mistakes, is that founder-led companies are loath to raise capital, and I didn't think about that at the time, but the reason PWI didn't raise capital is because the Keys Wheel, who's the founder and MD, he owns 30% of the stock.
Such
And
a good name.
oh, such a good name, isn't it? I know. It's worth buying just for that. And he doesn't want to dilute himself. And I think that's true of lots of fantastic founder companies, that they find another way. Whereas if you're a hired gun, your job is really risk mitigation, and you're quick to raise capital, even when it might not be all that necessary. So I'm going to remember that for next time. Mickey, what was your uh, biggest error in the pandemic, and what
Yeah.
did you learn from it?
Well, I think so. There's because I kind of thought about it, and I thought, it wasn't like because you could have. I think more so in the preparation stage, and then you kind of go, well, the market fell 40%, and you always wish you had more cash at that moment, so that you could have bought more. But then, you don't really want to hold cash over the long term because it's the lowest returning asset
Mm,
class, and that's fairly reliable to think that's going to continue.
mm,
So you don't really want to hold large levels of cash. I think the main thing that I really want to learn about is kind of protection in terms of maybe put options or something like that. And I think even that strategy has some drawbacks because it's just insurance, and over time, if you can afford to insure yourself, then you should do that. But
but
if
but
sometimes well, like if sometimes that protection gets cheap, then such as like you had this big lead up period where you could see the pandemic was
mm.
coming. There was a chance that you could have actually gotten out ahead of it. The market still wasn't aware of it, and you could have actually bought like some protection quite cheaply,
This is
and
known
not.
as the Hempton strategy now, right? This is exactly what John Hempton did.
Yeah, and I think Ackman as well, and there was a few
Mm,
other guys as well, and so that was something I'd never really
yeah,
considered, just being a
absolutely.
long-term buy and hold type investor. But I think if you use it wisely and use it at specific times, you
but
might be
really,
able to
but
do something with that. But
the thing is that being long and then having some sort of protection or put option or whatever just then turns that long position into a cash position, or part of it. It brings you back towards that cash position. So it's not particularly different. I think the reason for protection is because for capital gains tax purposes or whatever, you can't get out of your, or you don't want to get out of your, your winning positions. So
mm, but
but
yeah.
essentially it's no different. Taking all of that aside, it's no different than
Yeah,
reducing
but
and being in cash, is it?
I'm not kind of advocating for potentially having like a put, puts all the time and just rolling that all the time and paying for it all the time, because that would just be a massive drag. But, in that
But that's the same
specific
as what
situation.
people say with cash, isn't it, as well? They say, "Oh, now's the time to have a bit of cash," but
But in
yeah.
in that specific scenario, so if in February you saw that this pandemic was coming, you saw what happened in China, you saw that there was a tail risk that governments would shut down here, and you could see that you could buy that protection cheaply. I don't think that was a silly strategy at all. I think that
Mm,
was a pretty smart strategy.
yeah, point taken. It's something I didn't consider beforehand, and I heard Hempton did a great podcast. I forget where he did it, but he explained his thinking and the mechanism of doing that. It was actually led to him. I think he was the best performing fund manager during that period, and that strategy had a lot to do with it.
I reckon that's a dangerous game to get into. Not something
You probably
I
wouldn't be
would
able to
be
do it
advocating.
again. Maybe you couldn't. Maybe you
Well,
couldn't
it's
like
timing the
replicate
market,
it
isn't it?
next
Really,
time.
buying futures and whatnot is a dangerous game on both sides of the equation, long and short. But there we
Yeah.
go. That's my
Yeah. Well, I
thoughts.
don't know. It's just something to think about. I don't own any options. It's not something that I have done in the past, but it's something to think about. I think at least to
Yeah.
consider.
I think the point there is that um, you know the market was pricing in one probability of a tail risk, and the world was giving you evidence for a different probability, and
Yeah.
that made it a bit more interesting. I tend to agree.
Well, so a good time to take,
So
if that's your thinking, then a good time to take some profit and sit on some cash. But
Yeah,
and
well,
I
no.
don't
So the
see
thing was
cash
the
the thing was
stays
protection.
more. I think
stays
it.
at their level X, and if you take a put option, you could actually make money from that. I think that's
Yeah.
depending how aggressive you are, I guess.
So it's just like you're substituting an option for a stock, and the option is mispriced. The option is the mispriced asset,
Yeah,
basically.
that's right.
Um,
Well, yeah, but judging that
Yeah,
is a difficult thing. Anyway, look, I think we're
yeah.
probably
Anyway,
slightly
yeah.
off
Okay. So
topic.
JC, what about you? Something you learned from an error or something that went wrong during that period?
um, well, I think the main thing probably was this. Well, first of all, the luck. Back in March, but I think, I mean, you see, having doubled in, or near doubled in uh, March or February March, I then halved again in sort of May June, because everything had bounced, and I was then uh, extremely worried about what lockdowns were doing, having recognized that they were a thing. Um, and I suppose so. I sold. If I'd have done much better if I'd have held on to everything. But yeah, I think what I missed is that the situation for the whole economy isn't necessarily going to be the situation for the stocks. So, um, despite my concerns about what might, and I still have them, what might happen to the global economy and the Australian economy for the next decades, really. That doesn't have to mean that stocks will do badly. In fact, if it's going to keep a lid on interest rates, then of course their ratings go up, and that's what we've seen. And so I got in a bit. I was a bit lucky to get in early, and I got bumped out probably a bit early as well. But overall, it's been okay, and I've got a bit of liquidity now. So if things go bad again, I'll be all right.
Well, let's flip that and let's talk about what one idea or one trade that went really well and what you learned from that. Mickey, let's start with you.
well, nothing really stands out in particular. I mean,
They were all so good.
no,
Couldn't.
well, no, I'm kind of like you. It's kind of the ones I missed that tend to haunt me. It's like the looking at ARB, which is now tripled because we didn't want to
Oh
pay a
man,
dollar more for it.
I know, that's painful.
Also, so there's plenty of those, but yeah, I don't know. I mean, maybe AML, like from the publication perspective, I guess. Probably maybe AML. Just riding that one through. And now
Mm,
it's kind of back above where, almost back above our highest buy price now.
mm.
So just enduring that 80% drawdown and kind of coming through the other side, it was
Wow,
pretty intense. But I'm
that
happy
stock.
that.
What a tale there's a whole podcast just about EML during the pandemic because that was
Hmm.
the craziest ride.
It was pretty crazy, but it was also just another one of those ones where you could see that the market was just getting it wrong. And well, I actually at one stage with the acquisition going through, you weren't sure what was going to happen with that,
Yeah,
and
that's right.
that was the fear. And they were going to get stuck with this debt, and no one knew how that was going to end up. But fortunately, that's what one of the good things about having good management in
Yep.
place. Tom Cregan, he managed to renegotiate that deal on much better terms, and
Mm.
so fortunately, it all worked out well, and hopefully, some members managed to buy some as it fell.
Yeah. No, look, I completely agree. The impact of good management in normal times is often hidden and maybe small, but you really see the impact of good management in times of crisis. And email is a good example. The other one I was thinking of was Lavisa because that had
Mm.
a similar trajectory to EML.
Yeah.
It was at what $14, $15 pre-pandemic, and it fell all the way down to $2. And
Yeah.
it's one of my biggest holdings, Lovisa, personally. And I wasn't the analyst on the stock at the time, and I remember that was the one stock I was looking at, thinking, "Oh dear," because you could just see a really bad outcome for that. It's predominantly, it's all in store. There's very small online part of that business. The model isn't really set up for online at all, and the whole
Set up for
upside.
shopping center footfall, isn't it? That's what it's set
Exactly.
up for, which
Yes. Which is
which was
exactly
looking
what we
pretty
think's
scary
bad.
for a time.
Yeah.
But I guess that's the thing, it was able to ride it out. So
And the growth there was what, well, the entire investment case is really based on a store rollout, and you can't really do that when you have lockdowns for an extended period of time. So there was so much bad news. Everything was negative, and I felt negative, but I still bought the stock. The best thing I did was buying Lovisa stock at $3 and $4, and I felt physically sick doing it. It was already a large position for me, and it had fallen so much, but I can't even tell you why I bought it. It was just a raw contrarian instinct to buy that thing at that price. But I tell you, it's been that single trade has been responsible for so many of my gains. Well, think about it now. Buying it $3 or $4, a decent chunk, and it's now $12. It's been terrific, and it was down to buying into the teeth of the panic, not trying to buy the safest stock necessarily, but one that I understood well, one that I knew had best in class management, an owner that had a lot of money on the line himself, and superb economics
well,
for recovery.
that's where you made it. In my opinion, is that you understood it well. That's the key to it. So you, right in that moment where it was all going wrong for it,
Yeah,
you had that knowledge. You knew it well enough. I looked at Lavisa at that point, and I've never really. I mean, look, I've read the articles. I've never really understood it, and I didn't quite understand the situation
mm,
with the leases, and I was just too frightened. I mean, look, it's something I don't really buy retailers anyway, so I've probably never bought it. But
mm,
um, I think the trick is here that you've got to do the work on stocks
yeah.
beforehand to know what to buy and when it's as sharp a fall as that and as sharp a bounce.
And sometimes, you often hear these voices saying, to do the sensible thing, and the sensible thing at that stage was probably not to buy the Visa. I just think sometimes there are some points and some trades where being sensible isn't the optimal strategy. As I said, it was very hard to make a positive case for La Visa, but the only things I knew was management was fantastic. This is actually a terrific business in normal times, and the price just paid no regard for any of those things.
Mm.
Well,
And
so those are all that's all very sensible. Then I think with the with the benefit of hindsight here as well, but you understood it well enough to know that you know a few months and also it had Blundy the backer isn't he
yeah,
the
yeah,
and
he's
so there was reason to believe that he would take care of
yeah
shareholders, i.e. himself,
himself.
and
Yeah, yeah,
there was potential. There was a way that it could raise a bit of liquidity if it needed to.
yeah.
I
But
think as well there was a day there, Gaurav, because I remember we were all talking about it over email one day, and I
mm,
think there was just a bunch of margin calls on the Visa, and that's when it kind of got down to that $2
yeah,
level. Like,
I think it fell
um,
30% in a day. Actually,
yeah, it was
yeah.
just crazy,
That was, I
and
think I had bought the day before, and then it fell more than 30%.
Oh,
Yeah,
that's
but I
horrible,
was
isn't it?
okay because I was
Yeah.
actually prepared to lose money, and that's the other thing. I think sometimes you got to be prepared to lose money. And I think JC, you did this really well during this period. I remember speaking to you about these travel stocks, and you seemed perfectly content to own them through the panic and watchful for the other side. And that's probably the right attitude to take. You got to be prepared to wear losses for a little while.
Yeah, I mean, I was a bit lucky. I mean, Flight Centre I came to after it had raised money. Webjet I came to and published an article the day before it raised money. and and the thing about Webjet is that I sort of worked out its working capital position. I sort of had it I thought I understood it reasonably well, and I thought that it could avoid it, which is laughable with hindsight. But um, I was thinking of it being shut down for 6 or 12 months, or that sort of, with hindsight, it was going to need to be, operating at a very low level for well over a year. That's going to be how it turns out, isn't it? So
Is
yeah,
that
so
your
I,
pick
I got that.
for the best
Uh,
trade?
my best idea for the. Are we talking about best
Well,
trade oneself, or best idea for the? I mean, I think my best idea for the newsletter, funnily enough, hasn't actually done that well. I mean, Altium was probably my best upgrade, I would say. I mean, look,
mm,
Flight Centre and Webjet have done better. Altium, I wanted to buy closer to $40 in January, February, but you guys held me off, knocked me back, and so it was 28 before we
mm,
upgraded it, which is good.
mm,
And it's now only 34, so it's not really done what everything else has done, but it's I think it's a really high quality stock with a great opportunity in front of it. It's a whole different level of quality
mm,
than Flight Centre and Webjet, and so I think it's that one's a reminder for me not to be too afraid of current pricing metrics
mm.
when you've got such a great company with a great opportunity. But having said that, the reason we were able to buy it well is because you guys knocked me back, largely based, I think, probably on current pricing metrics. So there we go. Got a bit lucky possibly with that. I could have upgraded it at $38. I wouldn't be looking so smart.
All right. Well, it looks like Australia is through the worst of the pandemic. Everyone's got their fingers and toes crossed. And we can probably now have a think about what comes next. Fellas, what has been the most enduring change for you in your personal life and also in your investing life? JC, let's start with you.
Look, I'm going to be quite boring, I think, because I've been was talking about this the other day, and I would say that of everybody in the world, quite possibly, I've been as least affected as anybody by
Yeah,
the
that's probably
pandemic.
true. That's probably
We,
true.
we in Australia, I think we were very fortunate that it
Yeah.
hit during our summer, but we've also followed the policy that we've followed well. Um, I'm not a fan of lockdown, so I don't want to get into that. But if you're going to do it, then what we've done is we've done it well. So look, we've been largely unaffected compared to um, other people, folks down in Melbourne. But beyond that, also, I think there's estimates that tens of millions of people are going to be dying of starvation. So I don't want to say. I feel as though I've been pretty much entirely unaffected in my own personal life.
Wow. And has anything changed with the way you approach stocks? Has your investing psychology altered at all? Has your method changed?
No, I mean, it's re-emphasized the benefits of quality. Although, as I think I said in my analyst interview on the site a little while ago, I mean that's being tested at the moment. Quality stocks have got as much of a premium over cheap stocks as they've probably ever had. So we'll see how that plays out. But I mean, on the whole, I think there's something to be said for quality. But overall, um, it's been a reminder to expect the unexpected. The lockdowns just blew me away. I had no idea that that was even
Hmm.
a thing.
Hmm.
And but then also the recovery in the market has been astonishing. The fact that the market couldn't care in the least if the economy is going to be smashed and we're going to have, government balance sheet doesn't necessarily matter to stocks because if they lose in the growth, they gain in the rating, and that's an interesting thing, I think.
Hmm. Mickey, what about you?
Well, from an investing perspective, I think there's a couple of takeaways. I think one of them in particular is probably just thinking about risk, and so if you go through the risks of a company, you might think about these things and you go, well, there's going to be recessions, natural disasters, climate change, but often you don't really think about it enough. And so I think what you have to do is realize that these kinds of events are going to come along every 5-10 years, and they're not just something that you read about in a prospectus. They're actually real things that have real impacts on the business. And if you roll the dice enough, they eventually, they will happen. And so you have to invest on that basis. And so I think it just pulls you more into the quality, pulls you more into businesses with good balance sheets, good management teams. I think the longer term you think, the more you think that way. And so, yeah, just thinking about those risks. And I think second lesson would just be, just always trying to think from first principles, because you tend to kind of lean on precedents or try to oversimplify. So like we looked at like SARS and we expected a quick bounce back, and then we looked at the GFC and everyone was expecting really, really low net cash kind of multiples, but it's always different and nothing ever looks exactly the same. So you just always have to think from very ground level, first principles, and try to figure out exactly what's true, and not try to look at the past or try to lean on anything else. So
I love that point, Mickey. That is fantastic. Yeah, I haven't really thought about that before, but when you said it, it really rang true to me, because I think that's what everyone did, right? It's exactly what we all. That kind of explains the entire craziness of the market movements, is because everyone first looked at SARS and then looked at the GFC, and neither of those comparisons were the right ones.
yeah.
Yeah, nicely made. What about personally? I mean, you've had a difficult time over there in Melbourne. You you only moved
Oh
down there
mate.
just before the pandemic. It's
Yeah, I
pretty
timed
bad
it
luck.
really well. So I moved back in Melbourne,
Yeah.
to Melbourne in January, and then bang, lockdowns. So, no, I'm just a bit angry. I'm a bit angry at the situation. I'm a bit angry at the lost time and kind of
Mm.
the ineptitude and mishandling of the whole situation. And I don't know. I don't know. I feel like it's unfortunately not something that we can change now. But I think overall, as JC was saying, we've got it pretty good here, even so. And so you've got to just try to.
Have any of your personal behaviors altered, or anything you're doing
Not
differently?
really. Like, I mean, because I was already working remotely. I
Mm.
mean, I think I had a better routine, obviously, when I wasn't confined to my home. But I think most of my things will go back to normal. The only difference probably is, I used to go get some exercise at the gym sometimes. But then during the lockdowns, I bought my own equipment. So maybe I'm looking at potentially canceling that.
Oh, interesting.
So, but other than that, I think as soon as the restrictions are fully ended, I'm already pretty much back to a normal routine. I'll probably get back into the office 2 or 3 times a week as I was. So,
Mm.
yeah, nothing too different for me long term.
Look, I've got to say a few things. Behaviors have changed for me. So I was probably a bit lax with hand washing and things like that, and that has completely altered. I think I will. I've
You are
never had
kidding
sanitizer.
me, Gaurav. You're a crazy hand washer. How were you lax before?
Well, I never had sanitizer in the house. Never.
You
I
always had
didn't.
it in the office.
Oh, yeah, I used it in the office. That's true.
Yeah.
That's true. Yeah, you're right. My office behavior is different to my home behavior. That's because I work. I know.
That's because
I
you
see
got
the
young
grubbiness in
children.
the office. Yeah. No, you. It's an interesting point. I think it's because I generally try and keep the house quite clean, and I don't feel the need to sanitize
Just
everything.
all us filthy people in
Well,
the
yeah,
office. That's what
all
it
you guys. Yeah, I
is.
see what happens in the kitchen.
Yeah.
But I think sanitizer now is a permanent fixture in my life. I will always wear a mask on public transport. I think, just
Every
Really?
day,
I think
Really?
so. I think so. Yeah.
even if you're the only person on the
No, no, no,
public.
no. Not if I'm the only person. But if I'm traveling in a crowded train, like I'll have
And
it
is
in my
that to
bag.
protect others or to protect yourself?
No, myself.
But they don't. I mean, oh, look, let's not
We'll
get
get you
into
a
that. But
hazmat suit with
yeah,
the.
I don't know that. And there's, oh, look, there's evidence to say that you actually want to get a few little infections here and there.
Yeah.
You don't want to protect yourself completely, or your
Well,
immune
Although I
system
guess
will
that's
I've
do.
got
not that
I've got
crazy.
some
It's
little children, and I'm sure
They
they'll
give you
take
plenty. That's right.
enough.
You want
Yeah.
that's yeah.
But it's been remarkable that the trains for me have still been pretty packed, and because I just careful about what I touch, and I wear the mask, I haven't gotten anything, not even a
I think it's
sniffle.
what you touch far more than. Well,
Well,
look, yeah.
it's not
Anyway,
uncomfortable. I'm
it's
happy to
hard
do
to
it.
know. Anyway,
Yeah,
yeah.
and I just look it over in Asia, where they have the most experience with these things, and you don't get on a train in Korea or in Japan without wearing a face mask. And I
Was
think
that even pre pandemic?
absolutely pre-pandemic.
Okay,
Uh,
yeah.
I live in the North Shore, and there's a big Asian community here, even well before the pandemic. Seeing 5% of train passengers wearing masks was the norm, and I think I'm going to join that 5%.
Makes
But
you think, were we just that naive here in the West or something? I guess maybe we were.
Yeah.
I don't know.
perhaps, yeah. The other thing for me that's changed is just the work from home situation. I probably preferred being in the office in the past, and now that I've been set up and I've created all these home habits, and my life is now a lot more flexible than it was, and it's going to be hard to change that. So I'm probably going to be working from home a lot more. I imagine a lot of people are in the same boat. And thirdly, we always talked about moving overseas or living overseas or working overseas for some time, and that's just gone. Like we are never leaving Australia ever. Even well, I'm not gonna step on the USA for anything, not even for a holiday, for a good 10 years. It has to be disinfected from all the Trump stuff, and maybe in a decade we'll go back, but there's an embargo on the US and all question of working
Jeez,
overseas.
poor old US. I mean,
For any of our
yeah,
American listeners,
yeah,
Yeah,
that's right. I feel
yeah,
you being
we won't be shaking your hand.
harsh.
all three of them.
Yeah,
But yeah.
yeah, there we go.
But from an investing point of view, look, this has been the second big panic I've lived through, and I've been happy with my reaction to this one. The first one was proper panic, and this one I feel as I've learned from the GFC, and I think I'm pretty happy with the way things went this time. As a team, I think we did really well. We upgraded a heap more stocks this time. We were psychologically ready. We were ready in terms of research, and I think that made a lot of difference. What do I do? I guess for me, the importance of management has been it's more, yeah, I recognize that much more now. I've been a bit flippant about management in the past, and I've paid more attention to business models and economics rather than management. And I'm almost turned around on that. I just think I've seen too many examples of where management makes all the difference rather than economics or rather than
Mm.
business model. I've seen crappy business models where a good manager just blows everyone away, and I've seen the opposite. And I think a big part of the job ought to be actually identifying really good management. And it's a difficult part, and probably we haven't paid too much attention to that, but it's certainly much bigger on my list. You can just see from the businesses that have done well, a lot of the reason they have done well um, is largely come down to management behavior. I think it's hugely important and probably under recognized.
It's a great point. They seem to come up with just hidden sources of upside,
That's
and
it, right?
yeah.
Yeah. And none of that is really on the P&L or the balance sheet. Like it doesn't get priced adequately, I don't think. Like
Mm.
Lavisa, like that deal, it just instantly gave them another leg of growth for the cost of nothing, $30
Mm.
or something. And there are a number. I mean, Macquarie Telecom. I mean, that is another example of following management well. Infratel, Aussie Broadband. Like I just the time and time again, I look at the year and the stocks. Mineral Resources, another one, right? Like uh, um, the team didn't like it because and I understand why. On the numbers, it didn't look like a very good business, but and it's hard to make the case for an investment case based on very good management because it's a case almost based on faith, and it's hard to convince others. But yeah, if you can identify these businesses with superior management, that I think that's worth something.
Definitely, yeah, for
Now,
sure.
now
Yeah.
finally, gents, let's finish this off by looking at 2021. We've all got a long list of stocks to get through for January. We don't get much of a break. I think we've got a couple of weeks off and then we're back to it. I've certainly got a long list. I just want to get a feel from you guys about what stock you are very excited about covering or looking at for 2021. Maybe you know it, maybe you don't, but you're just keen to get your teeth into it. Mickey, what's yours?
Um. Well, I don't know. I mean, I reckon all the opportunities are gone now.
Oh, no. I think someone just lost their
No,
job.
no,
Yeah.
I think, look, I'm gonna take a look at a company called E-Road,
Yeah, you beat me
which,
to it. I had that one on my list as well. And then I
oh,
saw that
really?
I saw your name on the calendar with it, and I thought, ah,
Oh, right.
you
Yeah,
beat
no,
me to it.
I've actually been bugging Nath to let me look at it for quite a while because I've had a few other things going on with the banks and stuff. But uh, yeah, so I've finally gotten around to it this week, and I've done a fair bit of work on it. And it looks interesting, but I don't know what we're going to do yet with it. But yeah, I mean it's an interesting business. So the company does. It collects road user charges in New Zealand, and it's like a little piece of hardware that goes inside of trucks, and it basically collects road user charges and also helps with asset tracking and managing your trucking fleet, and they've kind of got some aspirations to go into the US, and well they are in the US and they are growing quite quickly, so it's another one of those interesting software businesses that we've kind of been covering of late. So yeah, so take a look at that and but not quite finished on it yet. So
Yeah, I've had a quick look at that. I think it looks really interesting as well. It's done very well in New Zealand, and I've almost got a rule now where if you've got a New Zealand software business that's done well in New Zealand and is listed here, it almost it has to get a look in. And so I've got a similar one to that. Mine is Plexure. Plexure, I think I got that right. Hard name, but very interesting business. So these guys actually run McDonald's global app, and the whole focus of the business is trying to create marketing opportunities through a retail outlet's app and to drive traffic back into the store. So it's trying to create a connection between an online and a retail shopping and getting people who are only looking at online to get into the retail stores. The stats suggest that they actually contribute to a much higher basket size and more trips to physical stores. They've got a really good client list, and it's currently unprofitable, but the technology is great. I think management's fantastic, and they've built a really interesting little business. So I'm going to be covering that in the new year, and I'm super excited about it.
mm,
The other one I've already done, but I was super excited about was Universal Store, which no one else seemed to like at all. But I still think it's quite interesting. Retailers are always tricky. Um, Fashion retailers are the hardest of all, and this is it can be a tricky business. I think it's superbly managed, and I've written a little review of it. I'll have another look in February when it reports, but I think that's interesting too.
actually, one other business I was interested in, I haven't gotten around to it. I don't know if we've reviewed it in the past. Was Collins Foods.
Oh yeah, we have done it in the past, but not for a while.
Yeah, I've got a terrific track record, and it's
Mm.
it does KFC, and I've got to say I've got a pretty soft spot for KFC. So,
Mickey, we've got
um,
to do some research on that. I think we're going to need a field trip, an analyst day trip.
oh,
I'll join
sounds
you.
good to me. Company sponsored. I
Yeah.
think they're actually bringing Taco Bell over here as well. So, I mean, covering that would just be a delight. But
Oh,
yeah,
you
no, I
just
think.
reminded me, Mickey. The stock I'm waiting for. I've talked about this to everyone on the team. I've probably talked your ears off about it, but Guzman and Gomez. Um, I think that they're preparing for listing for 2021. I'm all over that. I want in. I'm already saying it. I want in. I think it's a fantastic business. I've been following the founder for a while. The sponsoring PE firm is one I really respect, and I think that business has real legs. So when that lists, I will be definitely writing a review on that. And if
And definitely buying it,
I'll
no
be
matter
buying
the
it
price.
myself, if I can convince the other guys, there'll be a buy reco on it too. JC, we should let you get a word in here.
Yeah,
Wait,
I've been patiently waiting.
yeah,
What food
sorry,
do
you
you
have.
like, JC?
Oh well, actually, Guzman's good for me. They've got their vegan wraps. They've got a veggie based thing, and you ask for it without cheese. It goes well. Love it. Um, so I'm on to Breville.
Oh, yeah.
Is one I'm looking at, and it actually only came. Nate sent an email around about it this morning saying, "Did anyone want to have a look?" And I think, look, I don't want to prejudge it, but it's at current prices, it looks pretty. It's always looked expensive, and
Yeah,
that's the
it always
thing.
has.
And
Yeah.
and but it's one that, I mean, it's a really really good business, and it's one that it's worth having a handle on. As we said earlier, you got to understand these businesses well, so that if and when an opportunity does arise, you're in a position to take it. So I'm keen to get my teeth into that, and who knows, maybe it's worth paying up.
Hmm. Nice
Yeah,
one.
there's a
Looking forward to
lot of
that. Yeah.
interesting stocks though. I mean, there's still plenty that I was kind of kidding before actually. I mean, there actually is still quite a lot of stocks that still look quite cheap even now. Particularly I think in the smaller cap. range. But yeah.
Yeah, no, I agree. I think we're all still finding opportunity. Gents, we better let the good folks go now. I think we've chatted long enough. Thank you for your time and for all your efforts during the year, JC and Mickey.
Well, Andrew, yeah, it's been
Thanks,
good.
and thank you, listeners, for letting us pat ourselves on the back for a whole podcast.
We should also thank our producer Stephanie, who spends time every week or second week or sometimes third week to make us sound good. And we'd sound pretty terrible without that. You guys don't hear all the
Yeah,
interruptions, the pauses, the
yeah.
ums and the ahs, and that's because of
They hear
her
quite a lot
work.
of the ums and the ahs, I think, but,
I think she,
it could be a whole lot worse.
It could be worse. Hey, I know. Oh, just imagine. Also, the swearing, she cuts out all of that as well.
I think
Gets-
she leaves it in your case most
oh
of the
no,
time. But
it gets pretty filthy sometimes. And thank you
Say
for
for
all.
yourself.
Never from JC, of course.
Yeah.
And thank you for all our listeners and all our subscribers. We, feel very lucky that we can invest for a living, and glad to have you all on board.
It's a
If
great
you
job to have in a pandemic, I'll say that.
Oh, absolutely. Wasn't it just? Yeah. But look, if you enjoy the podcast, I think we're on Apple and other platforms, Spotify as well. So we want to try and get more people onto it. So I don't know what you have to do if you write a review or press the stars for likes. You can clearly see, I don't know how to get this done, but whatever you have to do, if you can do it, that would be great. And we can get more listeners on board. We're going to try and do more podcasts next year. And guys, I'm just telling you now, I want to try and get some other guests on board because I feel as though the three of us might be getting a bit dull. So we'll see how we go next year.
yeah, well, yeah, I'm sorry we have to drop you from the podcast, Gaurav, but
Okay, well, happy Christmas to everyone. And we'll see you back in January. Thanks for listening.